Good morning, Felipe. Today is the 15th of September, 2017, and I want to give you an update as to what is going on, changes we've made, and some neat things coming up in the future. First of all, in terms of reaching target, we have every reason to believe that we will reach target. It just may take a few weeks longer, that's all. So what you see on the screen in front of you right now is an email I got from Matthew. And what's important to note here is he's monitoring what I call the C trades. And this is a certain type of pattern that we look for. And so he's monitoring, there should be 30 some odd futures contracts for that particular pattern. I monitor it also, but it's really good to have somebody else doing it because there's quite a bit to it, and sometimes it can be really tricky. And as you know, when you're mentally watching this stuff and doing other things at the same time, it can be a challenge. So that's Matthew. He does what I call the C trades. Now this here is a spreadsheet that where we noted the trades earlier in the year in the systems we're using right now for trading. And let's say we have three different types of systems: the B trade, the C trade, and the D trade. Matthew is doing the C trade. Okay. And so here, for example, is an example of a system that Matthew would be following right here. He would not be following these systems here. Okay. Um, and the whole idea is to get him entirely focused on that, and because this is challenging enough for someone to do. So what you have here is you have the B trades and the D trades, and I'm watching out on all these guys. And what we've just done is we've discontinued temporarily the B trades, and we are focused only on the Ds. And the benefit of that is that if you notice here, the D trades, each time you see the letter D on here, that is 1 day. Okay, so the D trades on average take a lot longer than the B trades. And also the D trades have a lower failure rate than the B trades. Okay, and one of the things to note here, this was when we did a compilation of how many there were in the first 7-8 months of the year, we came up with a number that was significantly higher in the D trades. That's this section here. Than the let's see, these are the C trades, these are the D trades. Okay, so the C trades is a whole lot more of those than there are the D trades. But what we're going to do is we're going to set those aside for now until we have software that does it automatically, or we have somebody else watching it, because it just winds up working out better to have me watching D trades, keeping an eye on Matthew's C trades, and then also doing the R&D for some of the stuff we're doing R&D on, and I'll show you what that is right now. Okay, so let's take a look at cotton. I'm sorry, cotton, no. Let's take a look at cattle. Cattle is a C trade, and where we originally got in, including your account, is somewhere around here. And so right now you're long one position. In this particular account here, what happened was, this is the experimental account, price went up from here to here yesterday, and we sent out a really pretty chart when it was up here, and that one position had a profit of over $1,000. Well, as the market does, it promptly went down, and that one position was suddenly worth about a couple, $200-300. So it went down to about here. It went down worth only a couple of $100. And what we did was, in the experimental account, was put 2 more trades on, and we're now to have a total of 3 positions on in the experimental account, not in any of the managed accounts. So what we're doing is we're doing some R&D which says when we have a trade on that is very high probability and we have a pullback, let's take advantage of that pullback if we can find a highly reliable reversal point. So we wound up getting on here, and then it wound up, the line itself we were using, which went lower today, this morning, but it still wound up holding the overall trade. So it's doing okay. So that's what we're doing. That's the experimental stuff we're doing. Just like here, give you an example in the silver. Okay, so yesterday, or the other day, we went short silver around over here, even in your account. And so we're short silver somewhere around here. Okay, and there's a 15-minute bar. And so yesterday, silver went all the way down here. Wonderful. And it was up like $1,300, $1,400 per contract. Right? Well, last night, all of a sudden, the nutcase over in Korea shoots off another missile, and suddenly that up move had a contract per contract value of between $200 and $300 to the plus side. In other words, this trade was still positive, but only positive a couple of $100. Now, as we speak, it's positive a whole lot more because it's way down here. But what happened was I looked at the market when things were a bit to the upside, like right around here, and I drew this line here, which reminds me of what I'm developing for the intraday pullback thing. So here we go. Nice R2P. So give you an example. In this silver trade here, without this intraday stuff that I'm showing you, what we're really looking for is, here's a daily chart. We're looking for, since we got in over here somewhere. Yeah, right around here. So we got in over here somewhere, and we're looking for this market to go down, up, down, and we're looking for several pivots to the downside. And as you know, that can take quite a bit of time. So we'll just have to hang in there and wait and see what happens. Okay. And so this trade here has a whole lot more time, as does this sugar trade, which is driving me kind of nuts. There we go. So here's sugar, and you and I both got in somewhere around here. Okay, and it's down a little bit. The market is, and as you can see, the open value is $11.20 negative, and so it's just going sideways. And we wound up putting on an additional position in all accounts over here, and market's struggling with it. So the idea is that this would wind up being a long-term trade that would take the market down to a considerably lower value. It's just very difficult to predict how long this would take. Okay, this could take till the end of next week or till the end of next month. Just don't know. So we'll have to wait and see. Anyway, so that you know, understand, we're focused on the trades that take a longer period of time. And like this guy here. That is what is going on. So these are the trades we have on at the present time, and we'll go from there. Okay, so I'll be getting ready for the trip next week, and I may or may not have positions on because if I use this longer term approach with positions on, it's really not necessarily that difficult to deal with. It's just with the B trades, it's much more difficult to deal with when traveling. Okay, so I will see you next time. Bye.